Good morning. We will pay attention to the effect of transactions on the accounting equation today. Assets equals owner's equity plus liabilities, because all the assets in the business must be paid for. Where do we get the money? Either the owner provides it or we borrow the money. So therefore, assets will always be equal to the total money that the business owes the owner's equity, and liabilities. To determine which accounts is debited and credited, just to make it easier, we will use the word Alice. The first letter of the word A is assets, the last letter is expenses. So assets and expenses will increase on the debit side. Inside the word is liabilities, income, capital will increase on the credit side. The duality principle implies that each transaction must have a dual effect on the elements of the accounting equation, so that the relationship will always be equal after every transaction. So if we record something on the left-hand side of the equation, we must record something equal on the right-hand side of the equation. According to the double entry principle, a double entry will be completed for each transaction in an account in the ledger, whereby one account will be debited and the other account will be credited. So the principle from double entry in the ledger is related to the duality principle of the accounting equation. When we do any entry in the ledger, we must take this accounting equation into account to determine whether accounts will be debited or will be credited. Receive an invoice for 1,800 from Nell for goods purchased on credit. We bought on credit, so we owe the money to Nell, and we received goods. The inventory increased. Inventory is an asset, so my assets increase. We owe more money to the creditors, so creditors increase. Creditor is a liability, so my liabilities will increase. We bought inventory, so the inventory account must be debited with 1,800 because inventory is an asset. Assets increase on the debit side and decrease on the credit side. We will credit the account of a Nell or creditors with 1,800 because Nell or creditors control is a liability, and liabilities increase on the credit side and decrease on the debit side. When we buy inventory, the amount of inventory increases, so we will show that inventory increases on the debit side because we have more assets. We will credit a Nell or creditors control to indicate that our liabilities increase with 1,800. Issued a check for 670 to pay for rent. Money was taken out of the bank and the expense was paid. The money in the bank reduced back as an asset, so therefore my assets will decrease. If we pay expenses, it will reduce my profits, so the owner will get less profits, so the equity will decrease with the payment of an expense. The bank account is credited because we took money out of the bank. So bank is an asset that increases on the debit side and decreases on the credit side. We have less money, so we have to credit the bank. And we paid the expense rent. So rent will be debited because expenses increase on the debit side and decrease on the credit side. Issued a check for 320 to pay the water and electricity. So we take money out of the bank again to pay expense. The money in the bank is decreased, so assets will decrease expenses reduce profits, so owner's equity will decrease. Water and electricity account will be debited because it is an expense, and expenses increase on the debit side and decrease on the credit side. The bank account will be credited because the money was taken out of the bank, so the money is reduced. Water and electricity expense will be debited, and therefore the assets will reduce because we take money out of the bank, and the expenses will decrease the profit, so equity will decrease. Issued a check to Nell as part payment of his account. So we take money out of the bank, therefore the bank will reduce the assets. We pay Nell, so we are reducing our creditors because we owe less money to him, so my liabilities will decrease. In the ledger, we will remove the money out of the bank on the credit side, and we will debit Nell to show that his liability decreases and we owe less money. Liabilities decrease on the debit side. Nell is debited because he receives the money, and because he receives the money, we will owe him less money, so liabilities will decrease. The money in the bank will decrease, so we will credit the bank. Purchase goods on credit from ABC stores. We buy goods, so we increase the inventory, so assets will increase. We bought it on credit, so we owe money to the creditors, so we will increase our liabilities. The inventory account is debited to increase the assets on the debit side. ABC stores or creditors control will be credited to increase the liabilities on the credit side. Remember that the word that you write in the account, inventory, indicates that this double entry was done in the inventory account. And in the inventory account, you will write ABC stores or creditors control to indicate that the double entry was done there. So the words that you write inside the account always indicate where you can find the double entry. Receive a credit note from ABC stores for goods returned. So we returned goods that we were not satisfied with. That means that we owe less money to the creditors, so my liabilities will decrease. We have less inventory because we returned inventory, so inventory will decrease my assets. In the inventory account, I will show that I decrease the inventory on the credit side, and in ABC stores, we will show that we decrease the amount that we owe him, 280 Rand. Cash sales 1,600. Cost of sales is 1,200. So when we sell goods, we will always do two double entries. One double entry for the sales and one double entry for the cost of sales. We sold the goods for cash, so the money in the bank increased, so we will show that the assets increase. Sales will increase our profits, so owner's equity will increase. With the cost of sales figure, we have to show that we have less inventory now because we sold goods, so the inventory will decrease with 1,200, and the owner's equity will decrease because cost of sales is an expense that will decrease the profits. For the first double entry, we will indicate that the bank received more money, so the bank increased on the debit side, and we will debit the bank with 1,600. The double entry must be at 1,600 as well, so we will show that sales increase with 1,600. For the double entry for the cost of sales, we will increase the expense for cost of sales with 1,200 because expenses increase on the debit side and decrease on the credit side. We've sold some of the inventory, so my inventory decreased. I've got less inventory. I decrease assets on the credit side, so I will decrease inventory there. I will write the word cost of sales to indicate that the double entry for this 1,200 will be on the debit side of my cost of sales account. When we sell goods, we must do two double entries, one at sales price and one at cost price. So at the sales price, we will debit the bank to show that the total money that was received in the bank was 1,600. We will credit sales because our income is 1,600. That will increase our profits. For the cost price, we have to do a double entry at cost price. Cost of sales is the expense that will decrease my profits. Inventory is an asset that will decrease because we have less inventory now, so the assets will decrease at the cost price. Sold goods on credit to be low 540 and the cost price is 405. So again, we have to complete two double entries. The one at sales price and another double entry at cost price. We sell on credit, so our debtors, that's the asset, will increase with the sales price because that is the amount that they owe us. Sales will increase the profits. Then we will do a double entry for the cost of sales and we will show that the inventory decreases and cost of sales is the expense that will decrease my profits. We sold goods on credit, so the sales account will be credited with 540 and the account of B low will be debited with 540 because low is an asset. Assets increase on the debit side and decrease on the credit side. We sold inventory, so inventory must be decreased to show that we have less inventory, and cost of sales must increase on the debit side. We have to record two double entries again because we are selling goods. So one double entry will be at sales price and the other double entry will be at cost price. Low is a debtor. He owes the business 540, the sales price. So assets will increase with 540. Sales is an income that will increase the profits. Cost of sales is the expense, so it will decrease the profits at the cost price. Inventory is an asset that's always recorded at cost price, so assets will decrease with the cost price of 1,200. Below, returned goods and we issued a credit note to reduce his account. There again we have to do two double entries. So when we sell goods for cash or credit, or a debtor returns goods, we complete two double entries, one at the sales price and one at the cost price. So we will show that the debtors will reduce my assets at sales price, and debtors allowances reduces the original sales. So it means that it is an expense for the business because we're not going to make this profit anymore, so it will decrease owner's equity. The inventory was returned, so my inventory increased, so it will increase my assets. The cost of sales is now reduced because we didn't sell it, so it can't form part of the cost of goods already sold. If we decrease the expense, the profits increase, so equity will increase. Below returned goods, so this asset will decrease on the credit side to show that he owes less money, and debtors allowances will be debited to indicate that that original income that we had will be decreased because we didn't sell these goods anymore. Cost of sales is decreased because the goods are not sold, so it can't form part of the expense of cost of sales. The inventory was returned, so inventory asset increases with 120 rand. Debtors allowances will decrease the equity because we make less profit. Below is credited because he owes less money, so my assets will decrease. Inventory was returned, so inventory increases now, so my asset will increase. Cost of sales is cancelled, so it means we don't have this expense anymore, and if we reduce the expense, my profits will increase. Issued a check to pay for furniture, 990. Furniture increases, so my asset increases. We take the money out of the bank, so my assets decrease. So what did we do here? We change one asset into another asset. The bank is credited with the 990, and the furniture account, that is an asset, will increase on the debit side because assets increase on the debit side. What did we learn? Assets equals equity plus liabilities. Assets and expenses increase on the debit side. Liabilities, income and equity increase on the credit side. And every time that we complete an entry, we must complete a double entry with one account on the debit side and one account, the entry on the credit side.